All right, so let's dive deep into CBOE Global Markets.
CBOE Global Markets.
Yeah, using their 2023 annual report as our guide, we've got excerpts ready to unpack, and we're going to try to extract the most interesting stuff from it for you. We're talking global reach,
Okay.
leadership shakeups,
Yeah.
and even a venture into the exciting world of digital assets.
Yeah, so what I think is really fascinating here is the way that CBOE has built this incredible network.
Yeah.
So they're not just in like one little corner of the financial markets. They've got their hands in derivatives and securities trading
Yeah.
across continents, across asset classes.
It's like they're like the ultimate networkers, but in the financial world.
Right, they're everywhere.
And they're not just attending the party, they're hosting it.
Exactly.
They are the biggest options exchange in the U.S. and the third largest stock exchange operator.
Yeah, I mean, that's huge.
That's huge.
And their reach extends far beyond the U.S.
Yeah.
CBOE Europe is a great example of that. It's one of the largest stock exchanges in Europe by value traded. And they even own CBOE Clear Europe,
Right.
a pan-European clearinghouse, smoothing out transactions across the continent.
So they're not just big, they're interconnected.
Interconnected, exactly.
What does that, what kind of advantage does that give them, that global reach?
Well, think about it this way.
Yeah.
If you're a company and you're looking to raise capital,
Yeah.
or you're an investor and you're seeking new opportunities, wouldn't you want to be where all the action is, where the markets are most easily accessible?
Yeah.
And that's what CBOE offers. So this extensive network is a strategic advantage,
Yeah.
really positioning them well for serious growth.
It sounds like they're shifting gears a little bit.
They are.
Yeah.
They're moving away from acquiring companies left and right and focusing on what they call organic growth.
Yeah, and it's interesting because they've spent the last few years building this amazing house, and now they're really focusing on decorating and making it even better.
So they're prioritizing projects and investments that leverage this network that they've built, thinking long-term success, not just quick wins.
Okay, so not just chasing trends, but actually building something sustainable.
Yeah.
For the long haul.
Exactly. Absolutely. The report really emphasizes that.
Okay, so they've got this global network.
Mm-hmm.
They've got this long-term mindset.
Yeah.
What are the pillars of this strategy?
Yeah, what are they really good at?
What are they really good at?
Well, the report highlights three key strengths.
Okay.
Their global footprint, which we've talked about.
Mm-hmm.
Their emphasis on trusted, superior technology.
Okay.
And a focus on product innovation.
So they've got the reach.
Yeah.
They've got the tech.
Mm-hmm.
And they're not afraid to try new things.
Exactly. Because reliable and advanced technology, it's really crucial in this world,
Yeah.
the fast-paced world of finance.
Mm-hmm.
And constantly innovating, it allows them to meet customer needs as those needs change, seize new opportunities as they pop up. So they're the tech-savvy explorers.
Okay, so now for the juicy part. The leadership shakeup in September 2023.
Yes. So former CEO Edward Tilley resigned
Yeah.
after an investigation into undisclosed personal relationships with colleagues, violated company policy.
So that's a pretty sudden departure.
It was.
Was there any indication of financial wrongdoing?
So this is important.
Yeah.
The board explicitly stated that Tilley's conduct had nothing to do with CBOE's financial performance, operations, or reporting.
So more of an ethical issue than anything impacting the bottom line?
It seems that way.
Who stepped in?
Okay, so Frederick J. Tomsick, a former board member, took over as CEO.
Okay.
And William Farrar III, previously the lead director, became the chairman.
So it'll be interesting to see what direction this new leadership team takes CBOE in.
For sure.
Speaking of new directions, what about this move into digital assets?
Yep.
I mean, that seems like a bold step for a company that's so deeply rooted in traditional financial markets.
It is a bold move, but it shows that they're not content to just sit back and watch the financial landscape change around them.
Yeah.
They jumped headfirst into the digital asset space in 2023 and launched margin futures on Bitcoin and Ether in January 2024.
So they're not just dipping their toes, they're diving right in.
In the pool.
It seems like they're seeing this as more than just a fad.
They're looking at digital assets as a significant part of the future of finance.
Yeah.
And they want to be at the forefront.
And they dominate the options market.
Mm.
Maybe they're looking to do the same in this new frontier.
Possibly.
It's not just about the U.S., though, right?
No, you're absolutely right.
CBOE's a global player, and the world of finance is becoming increasingly interconnected.
We should talk about Europe.
Okay.
So the European Union is pushing for what they call a capital markets union, or CMU.
Yeah.
It's an initiative aimed at creating a more integrated and efficient financial market across the EU.
Okay.
So think breaking down financial borders, making it easier for capital to flow freely.
That's pretty ambitious. How does CBOE fit into this?
Well, their European operations are right in the thick of it all.
Yeah.
So subject to these evolving regulations.
Yeah.
Including those related to transparency, OTC derivatives, and even cybersecurity.
So on top of the usual business challenges, they've got to keep up with all these new rules.
Exactly, a complex landscape to navigate.
Yeah.
And speaking of oversight, CBOE operates under the watchful eyes of multiple regulators.
Like they've got referees watching their every move.
Kind of. In the U.S., you've got the SEC and CFTC.
Yeah.
And then in Europe, Australia, and Japan, they have to answer to various other bodies.
So compliance is key.
Oh, it's not just a suggestion, it's a necessity.
So we've got a company with global reach, embracing new technologies, navigating these complex regulations.
It's a busy time for them.
It's busy, but it's exciting.
It is.
What about the people?
Oh, well, good question.
Can they make it all happen?
Yeah, because a company is only as good as its people, right?
Right.
And CBOE really emphasizes its commitment to diversity, equity, and inclusion.
Okay.
They highlight their DEI program, mentioning the Diversity Leadership Council, and the CBOE Women's Initiative, which focuses on mentorship.
So it's not just talk.
No.
They've got programs.
It seems like they're putting their money where their mouth is when it comes to building a diverse and inclusive culture. And they believe that that is critical to their success.
Yeah, they're not just saying it, they're doing it.
Doing it.
But it's not all smooth sailing.
Yeah, well, of course not.
Every company faces risks.
Challenging.
And CBOE is no exception.
Right. What are some of those bumps in the road?
What are some of those potential bumps in the road?
Well, the report outlines some of the key risks, and I think some of these might particularly intrigue you.
Okay.
So, given their reliance on technology, and let's be honest, they're a big target in the financial industry. Cybersecurity risks are a major concern. And with those bigger players always kind of lurking, competition is fierce, and CBOE needs to stay agile to maintain its edge.
Yeah, it's like a constant chess match.
It is.
Trying to anticipate the next move.
For sure. And speaking of competition, attracting and retaining top talent.
Yeah.
That's another big challenge. In a job market that's as cutthroat as this one, securing those skilled employees, it's vital.
Yeah. And let's not forget about the constantly shifting regulatory environment.
Right. That's a constant source of uncertainty. It's like walking a tightrope while juggling flaming torches.
Okay, that's a visual. But yeah, I get your point. Staying compliant can be a real challenge.
And it's not just about staying compliant. It's about anticipating and adapting to those new regulations. That agility is crucial.
Yeah.
Now, before we jump into their financials, there's one more area I think you'll find interesting. CBOE's foray into U.S. Treasury trading.
Right, so that's through CBOE FX.
Exactly.
So another example of them diversifying their portfolio, expanding into new markets.
It's like they're constantly scouting out new land to cultivate.
Okay.
They're also making some waves with CBOE Global Listings.
CBOE Global Listings.
Yes.
Remind me about that one.
Okay, so think of it as a global matchmaking service for companies and ETFs. It's the first network of its kind designed to help these players access capital and secondary liquidity worldwide.
So instead of being limited to their local market, they can tap into a global pool.
Exactly.
And invest.
It's all about breaking down those geographical barriers.
Yeah.
They secured their first interlisted corporate issuer on the platform.
Oh, wow. Okay, let's zoom back in on their core business for a moment.
Okay.
We talked about CBOE being the biggest player in the U.S. options market. But how did they get there? What's their secret sauce?
Well, part of their dominance comes from having exclusive rights to offer listed options on some of the most influential indices out there.
Okay.
Think S&P 500 and the S&P 100.
So if you want to trade options on those indexes, you have to go through CBOE.
Exactly.
That's a pretty powerful position.
And this exclusivity extends to other indices, too, like the S&P 500 ESG Index and the S&P Select Sector indices. Those run until December 2033. And they've also got an exclusive license to trade options on the volatility of the S&P 500. That doesn't expire until December 2032. Talk about a competitive moat.
It's like they've got the keys to the kingdom.
You got it. But they don't just sit back and collect rent.
Yeah.
They leverage the data from trading options on these S&P indices to create their own volatility indices.
Like the VIX.
Exactly.
The fear index.
The one that everyone watches to gauge market sentiment.
So they're not just providing a platform, but they're creating tools and products that influence how people understand and interact with the market.
They're shaping the market.
Yeah.
Not just reacting to it.
And it's not just the S&P.
No.
They also have agreements with Dow Jones and FTSE Russell.
Exactly. So with Dow Jones, they have non-exclusive rights to offer listed options on various indices. Things like the Dow Jones Utilities Average, the Dow Jones Transportation Average. This agreement goes until December 2033.
Okay.
And then they also have exclusive or first rights in the U.S. to offer listed options on over 24 FTSE Russell indices.
Yeah.
It's all about that strategic positioning.
Okay.
So a vast network.
Right.
Creating their own products.
Yeah.
Forging those partnerships.
Yeah.
Expanding their reach.
But how do they manage all of these different markets? I
Right.
mean, there's not a one-size-fits-all approach.
That's where it gets a little technical, but it's worth understanding the basics. So CBOE utilizes various market models and pricing structures. It's like having different tools for different jobs. So, for instance, their U.S. derivatives options market, CBOE Options, is a hybrid model. They blend the old school open outcry floor trading with modern electronic trading.
So a little bit of Wall Street history mixed with cutting-edge tech.
Precisely. And they combine this with what's known as the classic pricing model.
Okay.
This model incentivizes market makers, the folks who ensure smooth trading by providing liquidity to direct orders to their exchange. It's a system that's been around for a while, and it's designed to keep things moving.
I see. So it's not just about the technology. It's about creating a system where all the players are motivated to participate.
Exactly.
Okay.
They also have 3 other options markets that are completely electronic. Each one has its own unique pricing structure and model, tailored to the specific needs and dynamics of that market.
So it's all about finding the right balance of incentives and rules to create a market that's fair and efficient, and most importantly, keeps those trades flowing.
You're catching on quickly. Now, let's not forget about their operations outside the U.S.
Yeah.
Can't just copy-paste their American model everywhere.
Right, because each country has its own regulations and its own market dynamics. How do they adapt their approach?
Well, for instance, in Australia, their fully electronic exchange uses a model where the fee rate varies depending on whether a participant is adding liquidity or taking it. So they directly incentivize those who are providing liquidity, which ensures that smooth trading. And unlike in the U.S., payment for order flow is strictly prohibited.
So different rules for different playgrounds?
Exactly. Over in Japan, they offer 2 fully electronic displayed markets. CBOE Alpha, which uses a more traditional maker-taker pricing model where the folks providing liquidity get a small rebate. But then CBOE Select, which is geared towards retail investors, flips the script. They have what they call a taker-maker model.
So the people providing the liquidity pay a fee, and the ones taking it get a rebate.
It might seem counterintuitive, but this strategy is likely designed to attract those retail customers. It's about tailoring your approach to your target audience. They also have 2 non-displayed markets in Japan, CBOE Match and CBOE Bides Japan, used primarily by institutional investors. Those investors who want to execute those large trades without spooking the market.
So they've got a whole toolbox of market models, each one designed for a very specific purpose.
Exactly.
It's pretty impressive.
It is.
But with all of this complexity and this technology comes a whole slew of risks, right?
You're hitting on a critical point here. In the digital age, cybersecurity is not just a tech issue, it's a business issue. It's a national security issue.
Everything.
It's everything.
And CBOE, given their role in the financial system, I mean, they're a prime target.
They are a prime target. Think about it. Sensitive data, billions of dollars in transactions. It's a goldmine for hackers.
So it's not just about protecting their own systems. It's about protecting the integrity of the entire market.
Precisely. The report lays out a whole litany of potential threats. Data theft, ransomware attacks, denial of service attacks that could just cripple their trading platforms, even just plain old human error or insider threats. The consequences of an attack could be catastrophic for both CBOE and the market.
That's scary stuff. So what are they doing to mitigate this? They're not just crossing their fingers and hoping for the best.
Hopefully not. From what the report indicates, they're taking that multi-layered approach to cybersecurity. They have those policies and procedures in place to safeguard their systems. They conduct regular security assessments, penetration testing,
Right.
basically trying to hack themselves. And then they provide cybersecurity training to their employees.
So they're not just building walls, they're training their people to be the first line of defense.
Exactly. And they're actively monitoring those systems,
Yeah.
auditing their defenses,
Yeah.
working with third-party security experts.
So pulling out all the stops.
Yeah. But, as the report rightly points out, no system is foolproof.
So the risk is always there.
It is. And as we become more reliant on technology, the stakes just get higher. But it's not just about the digital world.
Yeah.
They also face competition in the real world.
Right.
And it's a jungle out there.
Right. We talked about those big players lurking earlier. So how do they compete with these giants who have so much more resources?
They've got to be smart,
Yeah.
agile, like a nimble startup, even though they're an established player.
Yeah.
Focus on their strengths, innovate constantly, provide exceptional customer service.
Right. So they can't just rest on their laurels.
No,
They have to constantly be pushing
exactly.
the envelope.
They're doing that by prioritizing that organic growth, leveraging that network, and their expertise. They're not trying to outspend the competition. They're trying to outsmart them.
And of course, they need the right people to do that.
Mm-hmm.
We talked about attracting and retaining talent. What's CBOE doing to win the war for talent?
Well, it's a constant battle, especially in a field as competitive as finance.
Yeah.
CBOE recognizes they need to create a workplace that fosters innovation, rewards performance, offers those real opportunities for growth.
So it's not just about the paycheck.
Yeah.
It's about creating an environment where people feel valued.
Exactly.
Exactly.
It's about cultivating that culture where people want to come to work, contribute their best, feel like they're a part of something bigger than themselves. And let's be honest,
Yeah.
they're competing with some of the biggest names in finance, so their compensation and benefits packages have to be competitive.
High stakes, high rewards.
Exactly.
Okay, let's circle back to that ever-changing regulatory landscape.
Okay.
We talked about the EU's Capital Markets Union initiative. Are there any specific regulations that you think could significantly impact CBOE's business?
Well, in the U.S., for instance, the SEC has been busy cooking up some proposals on equity market structure. These proposals, if they ever see the light of day, could dramatically alter how CBOE operates.
So they're having to play a game where the rules could change at any moment.
It's like playing chess on a moving train.
Yeah.
And it's not just about existing regulations.
Right.
They have to be prepared for whatever curveballs regulators throw their way,
Yeah.
especially as governments are trying to wrap their heads around the rise of digital assets and other financial innovations.
Okay.
It's a wild west out there,
It is.
and CBOE has to be ready to adapt.
Speaking of risk, let's talk about how CBOE manages risk, particularly with these clearinghouse operations. Clearinghouses play a critical role
They do.
in the financial system, right?
They're the unsung heroes of the market,
Okay.
the ones who ensure stability,
Yeah.
prevent those domino effect meltdowns.
Right.
That could bring the whole system crashing down.
Okay, walk me through it. How do they actually work their magic?
Okay, so think of them as the ultimate middleman,
Okay.
a neutral party
Yeah.
that stands between the buyer and the seller in every trade. They guarantee that both parties fulfill their obligations, even if one side goes belly up.
So if someone defaults, the clearinghouse steps in to cover those losses,
Exactly.
preventing the problem from spreading.
CBOE operates several clearinghouses, including CBOE Clear Europe and CBOE Clear Digital. And these operations are not without risk.
Right.
They're taking on a lot of responsibility here.
What are the biggest risks that they face?
Credit risk is a major one. The risks that a clearing member defaults on their obligations, leaving the clearinghouse holding the bag.
So they need to carefully vet their members and have enough capital to cover potential losses.
Exactly. They also face liquidity risk, the possibility that they won't have enough cash to meet their obligations,
Yeah.
especially if multiple members default at the same time. Imagine a sudden market shock, like a major bank collapses and everyone rushes for the exits at once.
That sounds like a recipe for disaster.
It could be.
Yeah.
And then you've got market risk, the risk that the collateral held by the clearinghouse,
Yeah.
the assets that they're holding to back up those guarantees, decline in value.
Yeah.
So if the market takes a nosedive, those assets might not be worth as much. And the clearinghouse could be left scrambling.
It's like juggling chainsaws while walking a tightrope over a pool of sharks.
You could say that, but they're not just winging it.
Okay.
So CBOE mitigates these risks by requiring members to post margin,
Mm-hmm.
which is essentially a security deposit
Yeah.
maintaining a default fund,
Yeah.
that rainy day fund,
Right.
and then diversifying their investments,
So spreading the risk around.
spreading the risk around.
So they're taking a multi-pronged approach to managing risk. It sounds like they're doing their homework and taking it very seriously.
They have to. Clearinghouses are a critical part of the financial system. Their failure could have catastrophic consequences.
Now let's shift gears and take a look at CBOE's financial performance. After all, numbers don't lie. All right, so let's see how they're doing. What's the story?
Well, the report highlights that CBOE's total revenue actually decreased slightly in 2023. About a 5% decrease, to be precise.
Okay, so not a stellar year.
No.
But was it a major setback?
Not necessarily. Despite the dip, their revenue remained strong, exceeding $3.7 billion. They mainly attributed that decrease to lower transaction and clearing fees, which makes sense given the slowdown in trading activity we talked about earlier,
Right.
and also a decline in regulatory fees.
So it wasn't a sign of their business faltering. It was more of a reflection of external factors.
Yeah, but here's the interesting part. Despite the revenue decline, CBOE emphasized their focus on cost management and strategic investments.
So tightening their belts,
Yeah.
but still keeping an eye on the future. What kind of strategic investments are they making?
Well, they're branching out into pan-European single stock options.
Okay.
They've got plans to introduce a clearing service for securities financing transactions. Through CBOE Clear Europe, essentially becoming that one-stop shop for those looking to navigate the complexities of securities lending. And then, of course, there's that big bet on digital assets.
So they're not just playing defense, they're actively looking for ways to grow.
Exactly. Planting those seeds for future harvests. Despite the challenges, they remain optimistic about future growth opportunities, particularly in those organic growth areas we talked about and in the digital asset space.
It's like they're saying, hey, we might have hit a few bumps in the road, but we're still on track.
Yeah.
And we're excited about what lies ahead. Let's break down their revenue a bit further.
Okay.
Where are they making most of their money?
So the report divides their business into four main segments.
Okay.
Options,
Mm-hmm.
futures,
Yeah.
U.S. equities,
Okay.
and Europe and Asia Pacific.
Mm.
In 2023, the options segment, which includes everything from options on market indices to options on individual stocks, exchange-traded products, took the lion's share of revenue, about 42%.
That's not surprising given their dominant position in the options market.
It's their bread and butter.
Yeah.
The futures segment brought in a respectable 29% of revenue.
Okay, so they're spreading their bets,
Diversification.
not putting all their eggs in one basket.
U.S. equities generated about 22% of revenue.
And last but not least, Europe and Asia Pacific contributed about 7% of their revenue.
Which might seem small, but it represents a huge growth opportunity
Yeah.
as they continue to expand globally.
Okay, so let's flip the coin and look at their cost structure.
Okay,
It's not just about how much money you make, it's about how much you keep.
you got it. So are they running a tight ship?
Are they?
Well, the report proudly proclaims that their total cost of revenues actually decreased in 2023 compared to 2022. A 16% decline, to be exact.
That's impressive. How did they manage that?
The biggest contributor was a decrease in liquidity payments.
Right, those are the rebates
Mm-hmm.
that they pay to market makers.
Exactly. Like a thank you for keeping the market running smoothly.
Okay.
And with those trading volumes slightly lower in 2023, fewer opportunities
Right.
to earn those rebates. So CBOE's expenses went down.
Now, the market did them a favor. What else contributed to these cost savings?
Well, they also saw a drop in routing and clearing fees, primarily due to that decrease in shares routed on their U.S. equities exchanges. Again, a side effect of that slowdown in trading activity.
So they're benefiting from some external factors, but they're also being proactive
Yeah.
in managing those costs.
But remember, they're committed to those strategic investments we talked about earlier.
Right.
And those investments might increase costs in the short term, but they're crucial for that long-term growth. Think of it this way. You can't win a marathon by sprinting at the start.
Right.
You need to pace yourself, conserve your energy, invest wisely for the long haul.
So finding the right balance between controlling those expenses
Mm-hmm.
and investing for the future.
Speaking of leadership, let's meet the folks steering this ship. We talked about Frederick J. Tomczyk, CEO.
Yeah.
What can you tell me about him?
Well, he's definitely not a rookie. He's got a long and impressive resume in the financial services industry. The report highlights his 8-year stint as the president and CEO of TD Ameritrade Holding Corporation.
Yeah, a major player in the brokerage world.
Yeah.
He's also held various leadership positions within the TD organization,
Okay.
served on the boards of several other publicly traded companies.
So a seasoned veteran,
Yeah,
well-versed in the markets and strategic decision-making.
definitely. And his appointment was widely seen as a positive move,
Yeah.
bringing stability and continuity to CBOE. Now, he's not alone in this journey.
Okay.
Let's meet some of the other key players.
Okay, who are we highlighting?
Well, one standout is Catherine R. Clay. She's their executive vice president and global head of derivatives.
Okay.
Absolutely crucial role.
Yeah, that's like their crown jewel.
Exactly.
Yeah.
And she's no stranger to the derivatives market. Previously, she served as CBOE's global head of data and access solutions. And before that, she was the CEO of Livol, a company specializing in options analytics. CBOE acquired them back in 2015.
So she's got the technical expertise and leadership experience.
Absolutely. Now, let's meet the person in charge of keeping the books balanced.
Okay.
Jill M. Griebenow, CBOE's executive vice president and chief financial officer, overseeing all the financial operations.
Big responsibility.
No small feat for a global company like this.
Oh.
Extensive experience in finance, including previous roles as CBOE's chief accounting officer and the CFO of CBOE Europe.
Okay.
Before CBOE, she spent a decade at Ernst & Young,
Oh, wow.
one of the big four accounting firms.
Yeah.
So she's a pro when it comes to crunching the numbers, analyzing risks, making sure everything is squeaky clean.
Okay.
Now let's introduce David Howson,
Okay.
Kabaz's executive vice president and global president.
Okay.
He oversees global operations.
Okay.
He's got a long history of the company.
Yeah.
He served as president of Europe and Asia Pacific.
Okay.
President of Europe.
Wow.
Chief operating officer of CBOE Europe.
He's climbed the ladder.
You could say that. And even before CBOE, he had a successful career in the financial technology industry.
Okay.
He also serves as chairman of the boards of several CBOE subsidiaries.
Wow.
So he's really shaping the company's strategic direction.
It sounds like they've assembled quite a team.
A dream team
Yeah.
of experienced and capable leaders.
A major asset
Definitely.
as they navigate this ever-changing financial landscape.
Now, let's go back to Europe for a moment. We talked about the EU's Capital Markets Union initiative, but how is it actually impacting their European operations?
Right. It's one thing to talk about this grand vision, but how are they actually implementing it? What kind of concrete changes are they dealing with?
Well, the CMU is bringing a wave of new regulations and initiatives,
Okay.
particularly in the areas of transparency, OTC derivatives,
Okay.
and cybersecurity.
Okay, let's break those down one by one.
Okay.
Starting with transparency. What's the goal here?
It's all about shining a light
Yeah.
on this often murky world of finance.
Yeah.
They want to make it easier for investors to compare prices, understand what's happening in the market,
Yeah.
avoid getting ripped off. It's about leveling the playing field.
So how does this increased transparency actually affect CBOE?
Well, they operate several trading venues in Europe, and these venues are now subject to stricter transparency rules. So they might be required to publish more data on trading activity, both before and after trades happen.
It's like opening up the books a bit more.
Now let's move on to OTC derivatives.
Right, so this is a corner of the market that's often seen as shadowy,
Yes.
risky, where a lot of the big banks,
Mm-hmm.
hedge funds play.
So what's the CMU doing to rein in this Wild West?
What are they doing?
They're aiming to bring more OTC derivatives trading onto regulated platforms
Okay.
where there's more oversight
Yeah,
and less opportunity for shenanigans.
makes sense. How does this impact CBOE?
Well, they offer clearing services for OTC derivatives
Right.
through CBOE Clear Europe.
Right.
So these regulations could require them to comply with stricter reporting requirements
Okay.
or face limitations on the types of OTC derivatives that they can clear. It's about reducing that systemic risk.
So adding some guardrails and safety nets
Yeah.
to this part of the market.
Now, let's talk about cybersecurity.
Okay.
It's top of mind for everyone these days.
Yeah.
And the CMU is serious about beefing up cybersecurity across the entire financial sector.
So what kind of changes are they implementing? Are they making everyone wear those hacker hoodies and learn to code?
Not quite,
Yeah.
but they are introducing new cybersecurity regulations
Yeah.
for financial institutions.
Okay.
And these regulations could require CBOE's European operations to implement stricter security measures, conduct regular security audits, and report any cyber incidents promptly.
So raising the bar for cybersecurity,
Yeah, exactly.
making it harder for hackers to penetrate those defenses.
It's a constant game of cat and mouse.
Yeah.
And the CMU is making sure the mice are a lot more agile.
So it's a major shakeup.
It is.
And it's clear that CBOE is having to adapt and evolve to keep up with these new rules.
Now let's talk about something a little less technical, but equally important.
Okay.
CBOE's commitment to diversity, equity, and inclusion.
Yeah. DEI. It's not just lip service from CBOE.
Oh, no.
The report highlights their program,
Yes.
mentions the Diversity Leadership Council,
Mm-hmm.
and the CBOE Women's Initiative.
Let's delve into those.
Okay.
So the Diversity Leadership Council,
Yeah.
they're like the champions
Okay.
of DEI within CBOE.
Yeah.
The ones responsible for promoting diversity and inclusion across all levels of the company. So they advise senior management on DEI-related matters, develop and implement DEI initiatives,
Okay.
track CBOE's progress towards their goals.
So they're driving this effort.
Exactly. Making sure that it's not just a buzzword, but a core value embedded in the company culture.
And the Women's Initiative is focused specifically on supporting the advancement
Yes,
of women within the company.
it is. And they offer a range of programs designed to empower women, including mentorship programs,
Yep.
networking opportunities,
Mhm.
professional development workshops. They also advocate for policies that promote gender equality within the company.
So not just helping women succeed,
No.
but helping CBOE succeed.
By tapping into the full potential of their workforce.
Right. Diversity is not just about fairness.
No.
It's about smart business.
Exactly. A homogeneous workforce is like a monoculture in agriculture,
Okay, that's a great analogy.
susceptible to disease,
Okay.
lacking in resilience.
So it's clear that they're taking DEI seriously, but it's not just about the initiatives. It's about creating a culture where everyone feels valued.
Exactly. Fostering an environment where people can bring their whole selves to work without fear of judgment or discrimination.
That's powerful. Now, let's talk about a risk that every company faces, regardless of industry.
Yeah.
The potential for disruptions to their business operations.
Ah, those curveballs.
Yeah. So the report highlights a few potential sources of disruption. Pandemics, natural disasters, and cyber attacks.
Let's unpack those, starting with pandemics.
Okay.
I think we all remember the chaos of COVID-19.
Right.
Forced many businesses to shut down or adapt to remote work.
Yeah.
How did CBOE?
Handle that.
Well, they had to adjust quickly,
Yeah.
implementing remote work policies, bolstering their cybersecurity measures, and tweaking their trading operations to minimize disruptions.
So they're able to keep the markets running smoothly despite all the chaos.
They were, but they're not naive. They recognize that future pandemics could present similar challenges,
Yeah.
and they might not be able to adapt as seamlessly.
Right.
So it's a reminder that even the best laid plans can be disrupted.
So it's all about being prepared
Yes.
for the unexpected, having those backup plans.
Now, let's talk about natural disasters.
These can be just as disruptive, especially if they hit one of their key operating centers.
Right. Imagine a major earthquake or a hurricane
Yeah.
taking out their systems. I mean, that could bring trading to a screeching halt.
And even if their systems are resilient, their employees might not be able to get to work. They might have to evacuate their homes, deal with power outages. It's a whole cascade of potential problems.
So what's their plan for dealing with these?
Well, they're not just leaving it to chance.
Okay.
The report mentions that they have disaster recovery facilities,
Yeah.
backup systems in place. It's like an insurance policy against those Mother Nature curveballs.
But even the best insurance policy can't cover everything, right?
You're right. The impact of a natural disaster is unpredictable, and there's always that chance that those backup systems won't be enough.
So it's a risk they have to try to manage as best they can.
Now let's revisit those cyber attacks,
Right, those digital storms.
the invisible threat that keeps everyone up at night. The report kind of paints this grim picture of the potential cyber attacks that they face.
Ransomware,
Yeah.
denial of service attack.
Data breaches,
Yeah.
you name it.
And the consequences could be devastating, not just financially, but reputationally.
Oh, yeah.
Imagine those headlines. CBOE hacked, millions lost. It would be a PR nightmare.
So they have to be constantly vigilant,
All
updating their defense.
Exactly. It's that never-ending battle
Yeah.
against those digital bad guys. throwing everything they've got at it. Security policies, procedures, training programs, the works.
But we already talked about it. No system is foolproof.
Nope.
So there's always that chance.
That something could slip through the cracks.
Right.
It's the harsh reality of the digital age.
Yeah.
You can build the highest walls, but there's always a chance that someone will find a way over them.
So it's not just about preventing those attacks. It's about having a plan for when they happen.
You're thinking like a risk manager.
Okay.
It's about minimizing the damage, containing the breach, and getting back on your feet as quickly as possible.
Okay. So it's clear that CBOE faces a multitude of risks, both in the physical world and the digital world.
They do.
Yeah.
But the report also acknowledges a more general risk, one that's often overlooked.
Okay.
The potential for operational errors or failures.
Okay, that sounds pretty broad. What kind of errors are we talking about here?
Anything and everything. Human errors, system glitches, even fraud.
So it's not just about external threats, it's also about internal vulnerabilities.
And these internal risks can be just as damaging as those external threats we talked about.
Okay. So what are they doing to prevent these mishaps? Are they just relying on everyone being perfect?
Thankfully not. They have strong internal controls.
Yeah.
Risk management processes in place. Think of it as their internal immune system, designed to prevent and detect those operational errors before they become major problems.
Okay. So they're not just relying on luck, they're actively managing this.
Actively managing it.
Now let's zoom in on their financial position.
Okay.
Starting with their assets. What are we looking at here? What are their most valuable possessions?
Good question.
Well, the report highlights their cash and cash equivalents, which totaled over $543 million at the end of 2023.
That's a healthy chunk of change.
It is, and it gives them the flexibility to make strategic investments, weather any economic storms, and return value to shareholders.
So it's a safety net.
Yeah.
What else is in their treasure chest?
Well, they also have a portfolio of financial investments, mainly short-term, highly liquid securities.
Okay, so why hold those?
Liquidity. Having easy access to cash if they need it. Think of it like an emergency fund.
So they're playing it safe.
Yeah.
Keeping some dry powder on hand.
Exactly. It's like having a stash of cash under the mattress.
I like that.
But it's not all about liquid assets.
No.
CBOE also has a substantial amount of property and equipment.
The bricks and mortar.
The bricks and mortar.
What kind of property are we talking about here?
Well, they own and lease office space, trading floors, data centers in various locations.
Makes sense. Can't run a global market from your basement.
Right, exactly. These assets are essential, the backbone of their operations. Without them, they couldn't do what they do.
Now let's flip the script. Talk about their liabilities. What are they on the hook for?
Well, like any company, they've got bills to pay, various debt obligations, including senior unsecured notes and a revolving credit facility.
So they've used debt to fuel their growth.
Yeah.
Pretty common strategy.
Exactly. It's like taking out a mortgage, leveraging borrowed money to achieve your goals. They also have short-term liabilities, accounts payable, accrued expenses, those everyday bills.
Heels lights on.
Yes.
Gears turning.
They also have significant regulatory liabilities.
Right, those obligations that come with playing in this world.
Yeah.
What are those specifically?
Things like clearinghouse default funds, customer protection funds, setting aside money for rainy day.
So they're creating a safety net. Not just for themselves, but for the entire market.
Exactly, part of that commitment to maintaining a stable and trustworthy system.
Now, let's talk about CBOE's equity,
Okay.
which represents the ownership interest in the company. Think slicing up the pie and determining who gets which piece.
Okay, so walk me through this pie slicing. What are the main slices?
All right, so you've got common stock, the basic ownership shares. They give inventors a vote and a share of the profits.
Okay.
Then there's additional paid-in capital, which is that extra money investors shelled out for CBOE stock above its par value. It shows how much they believe in the company's potential.
So it's a vote of confidence.
Yeah.
A premium.
Exactly. Retained earnings, those accumulated profits that CBOE has reinvested in the business instead of paying them all out as dividends.
So it's like their savings account.
Yeah.
For funding growth and innovation.
And lastly, you have accumulated other comprehensive income, or AOCI, which includes those financial items that don't neatly fit into the income statement, but still affect the company's overall financial picture.
Okay, so give me an example.
Okay. Think of unrealized gains or losses on certain investments.
Okay.
Like a stock goes up in value, but you haven't sold it yet, so you haven't actually realized that gain.
Right.
or foreign currency translation adjustments, those fluctuations in exchange rates,
Yeah.
it can impact the value of assets held in different currencies.
So putting all of these pieces together,
hmm
what's the verdict on their financial health?
Well, based on the report, they seem to be in a pretty good place.
Yeah.
They've got a solid asset base,
Well,
manageable level of debt, and a track record of profitability.
they've got their financial house in order.
They do.
Okay.
And they're actively investing in future growth while also returning value to their shareholders. It's a balancing act, but they seem to be managing it well.
So they're putting that money to work.
Exactly. Playing offense and defense,
Mm-hmm.
a sign of a well-managed company. But let's not forget, they're not invincible.
Right. We talked about those risks. Cybersecurity threats, competition, the regulatory landscape.
It's a lot to handle,
Yeah.
but they seem aware of those risks.
Yeah.
And they're taking steps to mitigate them.
So to wrap things up, what are our key takeaways from this deep dive into CBOE Global Markets?
Well, CBOE is a global powerhouse in the financial markets,
Yeah.
with a commanding presence in U.S. options trading
Mm-hmm.
and a growing footprint in other markets around the world. They've built an impressive network of exchanges, clearinghouses, data products, and they're constantly innovating.
They're not just playing the game, they're shaping the rules of the game.
You got it. Second, they're transitioning from a growth strategy fueled by acquisitions to one focused on organic growth,
Right.
leveraging their existing assets and expertise. They're like a seasoned explorer, charting those new territories.
And that big bet on digital assets.
Right. They're embracing the future of finance.
They're not afraid to test those waters.
Third, they face a multitude of risks and challenges, from those cybersecurity threats to fierce competition and ever-evolving regulatory landscape. It's a demanding environment.
But they seem to be navigating it with skill. A strong leadership team, solid financial position, robust risk management framework. They're taking concrete steps to manage those risks and position themselves for success.
Exactly. Thinking strategically and adapting to the changing dynamics.
So all in all, CBOE Global Markets is a company worth watching.
It is.
They're this fascinating blend of tradition and innovation, a company that's deeply rooted in the old ways of finance, but also embracing the new.
And as our listener continues their own exploration of CBOE, here's something to think about. What role could CBOE play in this increasingly interconnected and rapidly evolving world of global finance? It's a question worth pondering.
Well, that's all the time we have for today's deep dive into CBOE Global Markets. We covered a lot of ground, but hopefully you've come away with a better understanding of this company and its role in the global financial system.
Remember, this is just a starting point. Dig deeper, do your research, continue exploring. The world of finance is always changing, and companies like CBOE are at the forefront of that change.